Welcome to North Main Financial with Joshua Dobi, presented by the North Main Financial Group in Cornelius. Joshua Dobi has been helping clients with their financial needs for over 2 decades and has registered to work with numerous tools for your long-term success. North Main Financial is big enough to help, but small enough to care. Visit them online at northmainfinancial.com. That's northmainfinancial.com. Here is your host and community investor and financial advisor, Joshua Dobi.
Hello and welcome to the North Main Financial Show. I'm your host, Joshua Dobi. Thank you so much for tuning in to this week's version of the North Main Financial Show. And you know, as a previous listener, we're talking on any number of subjects here. Often we're talking about things on a global, macro level, if you will, taking a look at what's happening around us to try to get some understanding in the best ways that we can, chuckling because that's not always easy, in the best ways that we can about what's happening economically and then certainly financially and with regards to the markets. But we also seek to break it down to an individual level, meaning we attempt to look at things that may be pertinent or part of your experience or perhaps a family member's, colleagues, those kinds of things, which again, hopefully can give you pause and some opportunity to reflect and think on your financial space. But in doing so, you also recall that nothing that we're talking about here is intended as a specific recommendation for you, meaning that even though we're talking on specific strategies, sometimes we're even talking on specific companies. We're probably going to do that again here today, where we're talking on specific companies, looking at stocks and bonds and CDs, all of those good kinds of things that, again, in doing so, nothing is intended as a specific recommendation for you. We strongly recommend that you reach out to your tax advisor or to your financial advisor, or if you'd like to reach out to us at North Main Financial Group, love to chat with you, love to hear about your particular financial journey, and to see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, main like the street, financial.com. northmainfinancial.com. We have a contact page on there. You can leave us an email address or a phone number. Let us know the most preferred and desirable ways for us to contact you. Again, at northmainfinancial.com. You're also welcome to call our office at any time, 704-987-1425. Again, 704-987-1425. And one more time, 704-987-1425. All right, again, thank you so much for tuning in to this week's version of the North Main Financial Show. And as I mentioned, my name is Joshua Dobi. I'm a certified financial planner, or CFP professional, and as we're talking about things of a financial and economic nature, I get it. Sometimes not the most riveting kinds of things. I understand that. However, and that's one of the reasons why we pound on these things so frequently, pertinent to all of our lives. I mean, certainly the things we're going to be talking about here again, when we're looking at what's happening in the markets, what's happening to us economically, those kinds of things that we're seeing and anticipating for the balance of the year, almost regardless of your personal financial space, it impacts all of us in some ways. And so we're going to be talking more about that, especially with regards to what we see for the balance of the year. We're going to do that in the second half of this week's show. A little bit of a teaser there. I want to make sure that you hang with us for the balance of today's hour. But first, let's get into some macro data. This has kind of become our go-to or our style, if you will, relative to getting a kickoff on the North Main Financial Show, talking about what's happening around us. You know, this week, actually this morning, as of the time of this live broadcast, or as of the time of the recording for this podcast, if you happen to be listening to it, this morning we had new unemployment data. And when I say unemployment data, I'm talking about new claims, meaning those folks who have filed for unemployment here in the last week. And then I'm also talking about continuing claims, or those folks who have been on claim or receiving benefits for longer than a week. So we're kind of getting the full breadth of new claims and then also folks who have been on claim. Friends, I'll tell you, and this has been a surprising point to me relative to this whole process of interest rates and inflation, which we're going to talk about here again in a minute. It has been surprising to me how resilient the unemployment rate has been. We didn't have a big uptick again here today. A pretty nominal number. When I say nominal, I'm saying that it's a fairly normalized sort of number, 240-ish thousand. That number always is revised, but around 240,000 new claims, right around 1.7, 1.8 million on continuing claim when it comes to unemployment. Pretty much in the wheelhouse, if you will, of expected, quote, normal kind of space. which is really amazing because with the kinds of movements that we've had in interest rates and inflation here in the last year, and you heard me say it, and I try to tell you when things that I see happen, certainly when the things that I see not happening that I thought were going to happen, I try to share that with you as quickly as I can as well. And I anticipated that the unemployment rate would have risen by this point. Hasn't yet. Doesn't mean it won't. I guess there's a sense in which that's always true, right? Always will be at some point in the future that it will. However, it hasn't happened to this point now that we are in month 14, almost 15 of this interest rate raising cycle by the Federal Reserve. It's a little bit of an academic exercise, but generally speaking, as rates go up, unemployment also rises along with it. Not one-to-one. There's not a direct correlation to it, but generally speaking, that tends to be an effect of higher interest rates. Haven't seen that. And so I'm thankful for that. It's not that I want for that to be the case, just was using that as something that I mentioned a number of months ago, that may indeed be our experience, and it hasn't happened at least to this point. So definitely something that's on our radar screen, trying to figure out why that's the case. Thankful that it hasn't, but understanding why that's the case. And perhaps there's a little bit more lag in the system than what we've had in the past with regards to unemployment. Another possibility that's out there, and it's another possibility that I like a lot more in terms of understanding where we are right now, has to do with the strength and resiliency of this current economy, and there are a number of other factors, which also indicate that as well. Certainly, when we're looking at the resiliency of modest growth inside of our economy right now, GDP growth in the 1% to 2% range annualized right now, which again, relative to the increase in interest rates, pretty amazing. Because there are some companies which have laid off, there are some companies which have cut back on capital expense or capital spending here over the last year and anticipated going forward. So when you're looking at it overall and you're still seeing that kind of space where there still is modest growth in the system, even with all those headwinds, that's encouraging. Glad to see that. Now, there's another factor in there, and I'm gonna bring this up. I know this is going to get probably you excited, maybe even me excited, maybe a whole bunch of people excited. But it has to do with the crossover or the interrelationship of politics and finance, or politics and our economy. Now, I'm not going to go one way or the other here as far as political persuasion is concerned, but I do want to touch on it because we're starting to see more folks who are declaring their candidacy for president of the United States. We've had actually several here over the last couple of weeks who have done that in various ways. And so we're starting to see the field line up for what will first be a primary if there is more than one candidate in the particular political party. There'll be a primary. If there's not, which at least I believe on the Democratic ticket at this point, there's only one, our current president, who has declared that he's going to run again. I don't know that there's been another one at this point. There are several on the Republican side who have declared that they're going to be running, so there probably will be a primary there, assuming that they all make it to the primary. So a number of different things that are in play there. I'm saying all of that to say, again, I don't want you to get all excited, but relative to understand your candidates. That's really the point I want to make right here. Understand their positions, understand their voting history, understand where they have been advocates in one way or another. Because, folks, I'll share this with you, and I think this is especially important when we're talking about our financial plans and when we're talking about our portfolios. You want to be careful. You want to be careful because I see this every cycle. You want to be careful about making adjustments to your plan or your portfolio based upon what you think may happen. I mean, I can point to every cycle with which I've been a participant here in my 28-odd years of being in the investment management and financial planning business. Every single cycle I've had a large number of folks say, well, if so-and-so is elected, these horrible things are going to happen, or these wonderful things are going to happen. Folks, it just doesn't work that way. It just doesn't. Now, does that mean that every candidate and every president has been wonderful? No. And I'm not going to tell you which ones have been wonderful. You can decide that on your own. But quite seriously, any number of conversations about that, who they say, well, if this happens, we've got to do this. Well, I'm always interested in how folks say those kinds of things, because outside of some relatively temporary measures when it comes to things financial, no president in our system of government is able to move unilaterally on policy. Just can't. they can do some temporary kinds of things. They certainly can be a bullhorn and an advocate in Congress, but Congress makes the laws. And then the judiciary holds them accountable to that. Now, it's not perfect. It doesn't always work in the ways that perhaps most of us would desire for it to go, but that is the way that it works. So when folks come and say, well, so-and-so is elected president, oh, it's going to be, the worst thing ever or the best thing ever, neither one's true in my experience. I mean, I'm just going through the list in my head of the things that were described to me in this last presidential election when folks were declaring about what was or what wasn't going to happen. If so-and-so was elected on either side of it. And no, none of those have happened that were shared in that kind of sense. And I'm saying it not because it's a funny business. It's a very serious business. But I'm saying it from the standpoint of we need to be careful. We need to be careful when we're talking about our financial lives and our investment portfolios in making, again, tweaks, adjustments, or even radical shifts just based upon what we think may happen. We don't do that at North Main Financial Group. Certainly don't advocate for it. If somebody wants to do it because the assets are there, certainly we will do it in the ways that are described. But we are very cautious to make large movements or recommend large movements ever based upon what we think might happen. Because it's a moving process. Things just don't stop and start every 4 years on January 20th or 21st or 22nd. They just don't. And so you want to be careful that in hearing about things that may or may not happen, you want to be careful that decisions are made for the right reasons. I know you hear me say that a lot, but certainly it bears true here, especially as we're starting to get candidates announced. So anyhow, but I'm going to take a deep breath here as we take a few moments to hear from our sponsors. You're listening to News Talk WSIC here on the North Main Financial Show. Financial Show. I'm your host, Joshua Dobi. Thank you so much for hanging with us in the second half of this week's version of the North Main Financial Show. And before I get all excited and run off into part two here today, let me make sure that you know how you can contact us. I don't always do this in the second half. I want to make sure that you have our contact information if you'd like to reach out to us at North Main Financial Group. Perhaps take a look at your overall investment portfolio, life insurance or other insurance portfolio, risk management strategies, retirement planning, all of those good kinds of things. Love to chat with you. It's in this day and age, it's maybe on a Zoom phone call or if in person is also possible and desirable for you, but never an obligation for that first time together. Just an opportunity for us to get to know each other and again to see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, Main like the street, financial.com, northmainfinancial.com. We have a contact page on there. Leave us an email address or a phone number. Let us know the most preferred ways for us to contact you, again, at northmainfinancial.com. You're also welcome to call us at any time, 704-987-1425. Again, 704-987-1425. And one more time, 704-987-1425. All right, again, thank you so much for hanging with us into the second half of this week's version of the North Main Financial Show. And right before we went to break there to hear from our sponsors, I was delving into what I know is our shark-infested waters, right, with regards to politics, and then politics and finance. And it wasn't for me to advocate for one political position or another, nothing like that, but really to float there for you or float out there for you how important it is, and this is bringing it down to more an individual level, how important it is that we make decisions for the right reasons. We're starting to get a number of folks who are declaring their candidacy for president, and understandably, we are a very purple nation in a lot of ways. About when you look at it from a certainly in terms of the folks who vote, we're very nearly 50-50 in terms of the folks who vote in our last several presidential elections, very close in terms of how the vote tallies shook out. So when we're looking at that, and we're trying to understand what's good policy or what is good strategy relative to our financial plans, our investment portfolios. Folks, it's real challenging, and we hear it all the time. We're starting to hear it again when folks say, well, if so-and-so is elected, then this is going to happen. Well, no, that may happen. It's not a guarantee that it's going to happen. We need to be cautious when we're making declarations about what we say is going to happen. No president in our system of government is able to unilaterally declare anything of permanency with regards to law. Certainly with regards to fiscal law or with regards to monetary law. Can't do it. And so is the president important? Absolutely, the president is important. But it's important, what we're talking about here on the North Main Financial Show, it's more important that we make decisions for the right reasons. And simply stating that something will or will not happen, A, doesn't necessarily make it so, and B, that's guessing. That's not good strategy. That's just conjecture of one type or another. So very, very important. You're going to hear me talk about this a lot over the course of the next year because you think it's noisy now. Holy smokes. We get a year from now, it's going to be a firestorm, in my opinion, in terms of the number of commercials and news coverage and this, that, the other. It's going to be a lot. So stay tuned. We're going to talk a lot about it as we're going through the next year. Again, not advocating one position or another, except for the advocacy of prudent thinking and making good decisions or making decisions for the right reasons. So I touched on that there. I know that's almost literally the proverbial third rail of media, but anyhow, I thought that was important, especially as we're getting a lot of thoughts on it and a lot of questions also being shared with folks. All right, I'm going to pivot a little bit. We're going to stay in the neighborhood of the land of politics, but pivot a little bit because from a timeliness perspective, this has been hitting the radar screen a lot, and we've been getting a lot of questions from folks. It's dominating a lot of our news right now, whether we're talking about online or certainly on television formats as well, and radio formats. And it has to do with this broad idea of the debt ceiling, and specifically the need for the debt ceiling to be raised, or for the amount of legally applied debt of the federal government to be increased. Just a real quick 101 as far as our federal government is concerned. We cannot arbitrarily increase our debt ad infinitum, meaning we can't just do it arbitrarily. And when I say taking on more debt, that comes from the issuance, usually, of treasuries, meaning that we sell bonds. When we sell those bonds, that is a debt obligation to the federal government. specifically with regards to treasuries. We can't just do that ad infinitum without any regard for the limit. I know the numbers are very, very large right now, but that has all been approved by an act of Congress. And that's where we are right now with regards to this discussion on the debt ceiling. Because we can't just arbitrarily do that, there needs to be, as we approach the debt ceiling, there needs to be literally an act of Congress for that debt ceiling to be raised. Now, I'm not going to get into whether it's right or wrong or the kinds of positions that are taken on each side right now. What I can say is that if the debt ceiling isn't raised, then it very likely will happen that there will be hiccups and disruptions in our financial system. Specifically talking with federal obligations, there could be delays in terms of the payment of interest on Treasury bills, Treasury notes, and Treasury bonds. So when we're looking at that, that could be very disruptive to the system, even on a delay kind of setup, meaning not something that's permanent or that they're never going to be paid, but even just a pause or a delay in those payments being received. It could also happen that some federal employees would not be paid for a while. It's not to say they would never be paid, but it could happen that they would not be paid or they would have delay in their paychecks being received. That also is a possibility. So, and on with other disruptions as far as federal obligations are concerned. At this point, and this is now purely subjective commentary on my part, so I try to disclose that as quickly as I can when we get to it. At this point, it looks like we are not going to go into default, meaning that there's going to be some kind of compromise. I can't say agreement, but some kind of compromise from both sides of the table to make sure that we do not default on our federal obligations. We're running right up against the razor's edge, though, and there's a lot of political posturing and saber rattling on both sides at this point. Again, not advocating for one position or the other, but at this point, with relative to our connectivity in the process and keeping up to speed with folks who are involved in the negotiation aspect of things, it looks like that there is going to be some compromise before we default. That being said, it's dominating the headlines, and the very least that's true. And this is just math. This is not political commentary. We have increased our national debt substantially here in the last 3 years. When I say substantially, I mean increased by over 50% in the last 3.5 years. Yes, due to a pandemic. Yes, due to programs that were put in place during that time. But the simple mathematical fact is we have. And when you're talking about not just billions, but trillions, and not just a couple of trillion, but over $30 trillion in debt. Which needs to be addressed. And now, coming back to interest rates and inflation, and now debt that needs to be issued with much higher interest rates in order to accommodate the current market, to sell the bonds, if you will. That's a larger obligation to the federal government. It just is. Again, not political commentary. It's a fact. And so when we look at that from an expense standpoint for issuing that next bond or going to that next level as far as taking on more debt is concerned, it's not 4 or 5 years ago where we could do that, 30-year treasuries at, 2.5% or 3% on a 30-year treasury. Now we're talking about shorter term debt in excess of 5% a year. Now that may not sound like a big deal to you, but think about it in percentage terms. Don't think about it in terms of numerical terms, in terms of just going from 2 or 3 to 5. Think about that in percentage terms. You're talking about between 40 and 50%, even up to 100% in increase of the cost of servicing that debt. Folks, that's huge. That is a huge, huge deal, and that impacts the budget process. That impacts our ability to spend. I mean, think about it in your own life. We don't even. I know $30 trillion doesn't even. I can't. I don't. How do you compute $30 trillion? I can't do that. But put it in your own life. Let's say that you had a mortgage right now, and let's say that you were paying 3% per year as your mortgage interest rate. And let's just say that interest rate just increased from 3 to 6% per year overnight, relatively speaking. Folks, your mortgage payment would be impacted dramatically, not in a positive way. It would jump up very notably over where it is right now. And that would impact your family budget. That would impact your ability to spend. That would impact your ability to save. That would impact your ability to invest. All of those kinds of things. That domino effect would spill over in all of those ways. That's what's happening with the federal government. Now, because it's so big and because there's so many dollars involved, it doesn't necessarily happen in the immediate that we feel it, but it absolutely is happening. Well, friends, we're rapidly approaching the end of this week's version of the North Main Financial Show. Let's do a lightning-fast recap talking about where we've been relative to politics and finance. Oh, gosh, we're going to get a lot more of it, right? It's going to be a supercharged kind of experience. Big point there, not taking positions politically, but make sure you're making decisions for the right reasons. Simply reacting to what's happening around us is not a plan, folks. That's guessing. So make sure that you're taking all of the information in. Get to know your candidates. Get to know truly who they are, not just who you're told that they are, but truly who they are so that you can make the best decision there. And then when it comes to making decisions in this kind of environment, where we're looking at higher inflation, higher interest rates, the debt ceiling noise that's out there, friends, make sure you're doing it for the right reasons. Well, friends, it has been a pleasure to be with you on this week's version of the North Main Financial Show. I'm Joshua Dobi, and I'll see you soon.
You've been listening to North Main Financial with Joshua Dobi from the North Main Financial Group in Cornelius. Find out how Joshua and his team can help prepare your financial future at northmainfinancial.com. That's northmainfinancial.com. Listen to the past shows on demand at WSICweb.com.
Securities and investment advisory services offered through SagePoint Financial Incorporated. Member FINRA SIPC. North Main Financial Group LLC is not affiliated with SagePoint Financial Incorporated. Investing involves risk, including the potential loss of principal. The views expressed in this radio show are not necessarily the opinion of SagePoint Financial Incorporated.
All investing involves risk, including the potential loss of principal. No investment strategy, including buy and hold and diversification, can guarantee a profit or protect against loss in periods of declining values. Past performance is no guarantee of future results. Please note that individual situations can vary, and therefore this information should only be relied upon when coordinated with individual professional advice. This information is not to be taken as investment advice or